Welcome back to the channel. Today I'm revealing the most reliable time-driven trading models inside the London Killzone. These setups are so accurate, they fail far less often than regular ICT entries. During these specific time windows, almost any ICT model you use tends to deliver high probability, clean and efficient price action. Moves formed in this zone rarely fail, and that's exactly why professional traders depend on it. If you only trade within these times, you'll catch multiple high probability moves every single week, all within a focused 30 to 60 minute window. First, let's break down what time-driven trading models actually are. These models are built around specific moments in time when the market is most likely to engineer liquidity grabs. In other words, these are predictable windows where the market hunts stops, creates displacement, and then delivers clean, efficient price movement. What makes time-driven models so powerful is that they don't rely on guesswork. You're not waiting for random patterns or trying to force setups. You're simply aligning yourself with times of day when the algorithm consistently produces high probability moves. During these windows, almost every ICT concept, whether it's a fair value gap, an inverse fair value gap, an order block, or a breaker, they tends to work more reliably because the market is already primed for a liquidity event. This results in stronger moves, smoother price delivery, and fewer failed setups. By focusing only on these precise 30 to 60 minute windows, you can catch multiple high probability trades each week without spending your entire day watching charts. It's efficient, it's repeatable, and it puts you in sync with the highest quality market movements. First, let's break down the London Killzone time windows where these high probability moves take place. The first key window is 12:30 p.m. Indian Standard Time, which corresponds to 2 a.m. Eastern Standard Time. This is the moment when the market frequently delivers a high probability liquidity raid. Now, take a look at this example. We get a clean buy-side liquidity raid exactly at 12:30 p.m. Indian Time. You can see the Indian time marked at the bottom of the chart. The same candle corresponds to 2 a.m. Eastern Time, and you can verify the Eastern Time at the bottom as well. Immediately after the raid, price drops sharply and efficiently, moving straight into the sell-side liquidity. This is a perfect example of how London Killzone timing aligns with predictable time-based liquidity grabs. Now let's look at the second time window. The second key time is 1:30 p.m. Indian Standard Time, which corresponds to 3 a.m. Eastern Standard Time. This is another moment when the market often delivers a high probability liquidity raid. Now, take a look at this example. We get a clean buy-side liquidity raid exactly at 1:30 p.m. IST. You can see the Indian time marked at the bottom of the chart. That same candle aligns with 3 a.m. EST, and you can verify the Eastern time at the bottom as well. Right after the raid, price reacts instantly and drops straight into the sell-side liquidity. This is another strong example of how the London Killzone timing aligns perfectly with consistent, time-based liquidity grabs. Now let's hop onto the charts and look at some real examples to see exactly how this actually works. So coming to the charts, you can see we have this 15-minute swing low and swing high. We will wait until the market takes either one of these liquidity levels. You can see the market swept our buy-side liquidity right at 1:30 p.m. Indian Standard Time, which is 3 a.m. Eastern Standard Time. Now we drop down to the 1-minute time frame and look for entries. Here we have a market structure shift and a fair value gap. So we enter short, place our stop above the high, and target the sell side liquidity. So the market triggers our order and starts moving downward. You can see how huge the risk to reward ratio it is giving us. You can see we got a clean and quick target. Now think about it. You can simply come to the market at these specific times and wait for a sweep. It's that simple. Now, in the second example, we will once again mark the liquidity levels, meaning the swing highs and lows within the range. The market takes out our sell-side liquidity at 1:30 p.m. Indian time and 3 a.m. Eastern time. Next, we drop down to the 1-minute time frame for entries. Notice this, we have an inverse fair value gap. We will enter long at this gap, place our stop below the low, and target the buy-side liquidity. You can see how clearly the market respected our gap and delivered a clean target. Now, coming back to the charts, we will mark our liquidity levels and wait until the market takes them out at our key times. You can see the market took our sell-side liquidity right at 12:30 p.m. Indian time, which is 2 a.m. Eastern time. Now we drop down to the 1-minute time frame to look for entries. Here we have an inverse fair value gap. We will enter long at this gap, place our stop below the low, and target the buy-side liquidity. Now our order has been triggered, and market has also started displacing to the upside. You can see the market moved straight to our target. Now tell me, don't you think trading becomes much easier when you keep it simple and execute consistently? So let's move to another example. So we have our buy-side liquidity already swept. Now we will mark our sell-side liquidity and wait for it to be taken out at our key time. You can see it gets swept right at 12:30 p.m. Indian time, which is 2 a.m. Eastern time. Next, we drop down to the 1-minute time frame to look for confirmations. We now have a change in state of delivery, so we enter long, place our stop below the low, and target the buy-side liquidity. Let me set my targets and stop to make it more clear for you, so you can see it clearly. The market immediately started moving to the upside. You can see we got a clear and clean target. Looking at these examples, you can clearly see that price delivers efficient moves at these specific times of the day. So here's a special bonus tip for you. Whenever you see price action, like this on the 1-minute time frame, where price has swept your liquidity level and created a huge displacement, you might be looking for a fair value gap but still feel unsure. In that case, wait for the reaction. Once price respects the FVG and then creates another market structure shift, you can enter. Place your stop at the previous low near the fair value gap and target the next liquidity pool. You can see how fast the market moves when price delivery is efficient. You can use this tip on any time frame whenever you're unsure whether a gap will hold or not. So I hope you've learned something from this video. If you focus on these specific times, they alone can make you profitable. Just use your own setup, but align these key times with your trading. You will surely see results if you follow it with discipline and consistency. Thanks for watching. If you want to learn more or have any issues, you can join my Telegram and Discord servers. And if you want live trading or daily market insights, you can message me on Discord to get direct one-to-one mentorship.